Good morning. For Traders Exclusive, this is George Kachuk with RCM Wealth Advisors, reporting to you from the CME Group trading floor in Chicago. Let's talk about the equity markets. Well, the equity markets continue to perform very well. And one of the concepts I'm going to talk about today is we're going to call sitting tight. Basically what that means is when the market's working for you, you don't want to be jumping around from one trade to another looking for a better trade. If you have stocks that are working for you, you want to give some time, let those stocks work for you and sit in those stocks. So let's take a step back and take a look at what's going on in the indices. We got the NASDAQ above 7,500. It's above its January highs, but still slightly below the March high when I tried to make a March high. But the important thing to know on a closing basis, on a monthly closing basis, that's a new high for the NASDAQ. Similarly, in the Russell 2000 Small Cap Index, that index is also hitting new highs. We have the Micro Cap Index also hitting new highs, so that's very good for the market. Now the S&P 500 is still working its way off a bottom. But it had a successful retest of its 50-day moving average. Coming off that low from the May 3rd, that was the last low made in this market, sort of the third leg down. It's been acting very well, as is the Dow Jones Industrials and the Dow Jones Transports. So that's all very productive for the market. And most importantly is the important sectors that we want to see performing well is technology sector, and that's pretty much on fire. In past episodes, I talked about watching three bellwether stocks. One was Amazon, another was Nvidia and Netflix. Pretty much those stocks are on fire, hitting all-time highs, and it's very good for the market. So, now if you followed us over the last few weeks, we're buying a lot of growth stocks. Of course, none of those are buy recommendations. You always have to consult your financial advisor. However, those growth stocks off that May 3rd bottom have been acting very well. They're acting better in the market. Now, the thing to do is you have to sit back, give your stock some time to work for you, unless something goes terribly wrong. Now, what does that mean, something goes terribly wrong? Well, if the stocks start acting funny, they're unable to hold their 10 or 20-day moving average, or they start crashing through a 50-day moving average, that's telling you a little bit character change. Maybe those aren't the stocks that you do want to hold. However, if all these stocks that are showing very good relative strength or bounce off support level over the last couple of weeks and are continuing to trend higher, you just want to be able to sit back and sit tight, let the market work for you. To make the good money in the market, you need to be able to hold for long periods of time, let that market compound those gains for you. If you jump around a little too much, that's a difficult game, man. You may miss some stocks that you were in that continued on to possibly go for a double or triple. Who knows? You never know. Now, of course, I'm being very positive here because the markets are trending. Of course, anything can happen. The markets can turn on a dime on you, but you have to give it some room, let the trend work for you. As I always say, let price and volume be your guide. So this week's message is, if your stocks are working for you, sit tight, don't overthink it, give them some room, let them run. But of course, if they start turning on you, that's when you want to say, okay, maybe it's not working, maybe this market's not ready. So as always, have a great trading week. This is George Kachuk with RCM Wealth Advisors, reporting to you from the CME Group trading floor in Chicago. Have a great trading week again, and let price and volume be your guide.